We're already seeing so many price increases with Tesla across the board for every model in every market. Yes, partly due to inflation and supply chain issues, but mainly due to demand rising. We've not seen the same price increases with the other EVs, aside from car dealers trying to add as much as they can where possible. But demand will rise. The EV movement is real. Consumers want electric, and governments are incentivizing electric. The problem is, a clever company named Tesla managed to make a product that really should be around $100,000 with traditional processes and manufacturing. Well, they managed to get the price point down to half that due to outstanding engineering, manufacturing, and technology. The problem is, this price point has now been set, and it's what consumers expect, which makes it very hard for the competition to compete and do so at a profit. So much so that even to this date, there is no BEV manufacturer that is making a net profit. I still think this is a big deal. Sure, some might have over $10 billion of cash, but when their burn rate will only last 4 more years, when they aren't even making any cars, like Rivian, then this may become a problem in a couple of years. ICE cars could be getting more expensive to run also if we have more expensive gas prices. This then means that EVs are of more value as the savings on cost of ownership become larger, which means EVs can justify a higher price tag. I still think this goes underlooked, but some legacy auto brands have a lot of goodwill in their brand and they carry a certain prestige due to their class and history, brands like Porsche, and Porsche is therefore able to get around this issue by simply making EVs that are nearly $200,000 and consumers will still pay for them. But other brands that people are not willing to pay for have had to work very hard in trying to copy and straight up steal as much of what Tesla is doing as possible and reach similar price points, which are also aided by government subsidies. Whereas other OEMs are using their best brands like Mustang so that consumers do see extra value in the car and willing to pay a little bit extra for it. Others have simply created a whole new line of electric brands like Volkswagen's ID range and just tried to make the cars at a lower cost as possible. The IDs are very basic, yet they're still selling for a loss, but do undercut Teslas. Even despite their almost century or so of experience manufacturing cars, they still can't make EVs at as low a cost or as fast as Tesla can. We really have to hand it to Tesla just how fantastic a job they have done. But these legacy companies are also stuck in their old habits and ways of doing things, with the mantra of if it ain't broke, don't fix it, or you may lose your job, whereas the ethos is the opposite at Tesla. As a result, new innovative auto manufacturing techniques are encouraged, such as the Gigapress. But time has moved on. It's been years since Tesla launched the Model 3, and still we have yet to see another EV that can be built profitably. However, profitability comes from two sides, cost to build and price to sell. It's all about the difference in between those two numbers. Naturally, we would expect the cost to reduce, at least relative to inflation. We expect powertrains to improve in technology, and we expect motors to improve in efficiency, software advances, Moore's law with chips, and of course battery technology to vastly improve and become more efficient and lower cost, provided the commodity prices don't go bonkers. We're going to see more economies of scale, more vertical integration with in-house battery production, getting the cost of the battery pack down from perhaps 1/3 the cost of the car to just 1/6. That's a big saving. Anyway, as I said, Tesla have been raising prices. This automatically makes the competition comparatively cheaper to buy than a Tesla. Of course, for the competition, more sales are not great if you're losing money on every car you sell. But Tesla's waiting lists are also increasing, and with a rebate in the US, this will only add to it significantly. Therefore, if some of the other EV companies are able to raise their prices, they may make a profit. Of course, the Chinese EVs won't benefit in the US from this, and GM don't make any EVs really. They really don't. And what's up with the Hummer using over 200 kilowatt hours of batteries per vehicle? They really went off the rails on that one. But Ford with the Mach-E and Lightning, then maybe. But we're still talking small numbers until their battery factories come online, which will increase production for them and reduce cost. And with subsidies, they may make a profit, especially if they raise prices. Remember, this video is not about which legacy OEM is going to make it or go bankrupt. This is just explaining how EV prices will rise. And the same may occur in China. The Chinese EVs may raise prices, particularly if they struggle to reach volume production. They'll work out pretty fast the only other way to make profit is raising prices and reducing costs. But they may not be able to justify price rises domestically, or at least not high enough to make a profit. But the ones that make EVs eligible for export, then they could raise their prices higher in the European markets, especially if Tesla are raising their prices too. But they may still suffer from protectionism in these nations. But again, Tesla's waiting list could be crazy. And if these Chinese EVs are not ramping up to volume production, then they're only making a few 100,000 units a year anyway. So it's not that many to have to sell really. So maybe some of them can eventually scrape a net profit, but then they're somewhat niched and never going to be big, i.e. make a large contribution to solve the transition off fossil fuels, which at the end of the day is what it's all about. At such low units, they will struggle with other economies of scale, like service centres. Perhaps the Chinese need to target nations that can afford higher prices for vehicles, have no domestic order market to avoid protectionism. The countries that come to mind are Norway, Australia and New Zealand. These aren't huge markets, but like I said, the Chinese are likely not making huge quantities, and they are perhaps still selling in China. They might be able to justify a $50,000 price tag, which is possibly going to be 20 to 25% gross margin for them. Xpeng currently get around 14% gross margin, but still make a loss. Perhaps with some more ramping up and these margins, they could break even, but it still doesn't feel like it'd be a huge profit. Meanwhile, as demand continues to increase globally, Volkswagen can justify higher prices and eventually make a profit on their BEVs. It won't take too much of a price rise, accompanied by lower battery costs, that they can make a profit. Okay, sure, they still have this liability called their ICE business as well, but before you comment about that, remember this is just about prices rising. Therefore, I think that we've been spoiled initially by Tesla entering the market at such a low cost for EVs. I mean, there was at one stage a $35,000 Model 3. I don't think Tesla really had quite the demand at the start, and they had to get these cars out first. Remember, Teslas sell Teslas. It's a grassroots marketing campaign. Tesla didn't spend a cent on advertising. It's the other Tesla owners selling them to their friends, families, acquaintances, and work colleagues. Now the demand is starting to pick up, along with the EV movement. Tesla are being priced now closer to the actual value they offer. I've compared Teslas to BMWs in the past, and even just at the sticker price, the Tesla is so much better value, let alone the actual cost of ownership. Consumers are also realising this more and more too, and willing to pay more. We're also seeing how much better Teslas hold their price. This is the number one reason that ever put me off buying a new car, is that they just depreciate so bad. And I thought buying a 5-year-old car is much more justified. But Teslas don't depreciate. We see them holding their prices, or even becoming more expensive used than new. The used ones are likely to appreciate even more when Tesla's waiting lists become as long as a year or two. Once people realise this about Tesla, then they'll also feel more comfortable spending more on a Tesla. If Tesla raise their prices, and like I said, if Tesla are raising their prices, well, Tesla are the benchmark. It simply means that the other EVs can also raise their prices, as the market becomes more comfortable with that. And as a result, the competition could squeeze a profit. Eventually, a lot of the BEV businesses could generate a net profit, but that still doesn't mean they can ramp up volume production. No one has yet, and Elon continually says just how difficult it is. And for the other OEMs to make a significant impact on the transition, volume production is required, or else it's pretty much all left to Tesla. Now, just because legacy autos may be able to scrape a profit from their EV side of a business doesn't mean that the tables won't turn and their ICE business could end up resulting in a huge loss and bankrupt them still. All I'm saying is that maybe prices will rise enough that consumers will still be buying EVs at these high prices, likely due to rising gas prices and the overall demand for people going electric, and that these price rises will eventually make these BEVs actually scrape a net profit, although it might not be a big one. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.